Hey, welcome to my channel. This is Free Finance Stocks with Rory, and you don't want to miss this. This is how I screen stocks for free, and I do it thoroughly, a pre-screen. And then this company as well has a $1.8 trillion backlog. So you do not want to miss this. This is a backlog that's like the size of like Microsoft or Nvidia or Google. All these big companies, this company has a backlog waiting for them that's worth that much. And it's not even all priced into their stock yet, as you will see. So ticker symbol ETN, Eaton, and they do special industrial machinery. The first thing I like to do is find out what they do. So I scroll down here and there's a quick overview of what they do, a description of the company. And they're based in Ireland, but they're trading on the New York Stock Exchange, and they're trading on the American markets as well. I like what they do. They're into a lot of different stuff that deals with basically power and electrification. And that's what a huge sector right now is electrification. All these new technologies are coming along, like semiconductors, um, robotics, clean energy, nuclear energy, all these other different things that this company is essential for, as you'll see. I like to see a performance of the stock over a year. They're doing great, 44%, 5 years, 262% in their lifetime. Look at that. You just see straight growth over the years. A few lumps, that's typical, but they always seem to find a way to get back up to the positive side. After I look at that, it's like, okay, they're performing. I like to check the PE ratio. And they seem to be, a bit on the pricey side right now when you look at the PE ratio right here, 36. I like it to be between 15, maybe 20. But some stocks typically trade at a high PE ratio. So we have to look at that and investigate further to find out. They pay a dividend. Look at the market cap, 136 billion, and they have a 1.8 trillion dollar backlog. Is what I heard on their last earnings call that they have. So you can see the stock is $345 now. The 52-week high was a bit higher. A year ago, you could have got the stock for $236, which is when I started to buy in initially. So I like to go to more to find out more about the company. The price of sales, I like it to be below two. But as you can see over time, over the quarters, you can see it's been trending up. So the stock is getting pricier and pricier, and it's probably because of that backlog. People are buying in because they're comfortable that the company's ability to generate capital over a period of time. So I scroll down, I look at this stuff quickly to find out what they're doing. I like to mostly look at the cash to find out what they're doing with the cash and how much debt they have. And they don't seem to be out of control with debt. They have like 4 times more debt than cash. So 20% cash to debt to me is good. I like that. I like to see the float 393. I like smaller float stocks typically, but for dividend stock, I can deal with 393 shares. I can own some of the company and be comfortable with my investment because of what I just told you. But there's a lot more to this company than just the amount of money that they're able to generate. There's a lot of things that I'm going to show you. So stay tuned. Stay with me. I like to look at the short interest. The dividend payout, I like it to be below 50%, and this is 39, and I love that. So after I'm finished here, right, I like to come out and go to other websites to find more information on the stock. And one of my favorite places to go is macro trends. So I go to macro trends and I type in the ticker symbol up top, ETN, and I show up. I like to check the first thing is a revenue. You can see a general growth in revenue over time. That's what I like. I go to the earnings before taxes. That's growing as well, the EBITDA. I like to go to net income. How are they doing with net income? Generally, it's been trending up over time, and that's what I like to see over time. And all these websites, I'm going to put links to them for you so you can go on here and you can look for yourself without having to deal with all this. Oh, you got to sign up and you don't know where to look and how to look or how to screen your stocks. You're getting free game here. I'm not asking you to sign up for anything. I don't think I might do that in the future, but right now, the only thing I'm doing is screening stocks and I'm doing it for free. All I ask is that you like, comment, and subscribe. If you feel like I gave you some type of value from this video or I gave you free game, I would appreciate that a lot. That's all I need to do is to help me to grow the channel so that we can provide each other with better quality videos and stuff like that. But anyway, I like to check the shares outstanding over time. There have been buying back shares. They've been buying back shares since 2013, and I like to see that. Then I come back up here, I check the assets and liabilities and go to shareholder equity. I like to see that they're building value for their shareholders over a period of time, and they have been doing that generally. It's a bit cyclical of a company, but as of late, they're on fire. Like I said, with the 1.8 trillion backlog and whatnot. Then I like to check the margins. As you can see, strong margins. You see a company with strong margins, like they have some type of competitive advantage that makes it possible for them to perform this way. Over a period of time, I'm talking about from 2009, they've been increasing their margins. It hasn't been up in a straight line, but generally this is where it's trending. They started out at single digits and look at them now. Double. Who knows what they can do in the future? Price ratios. I like to see that they've been generating earnings per shares compared to their price. So they're not just living off a hype. And as you can see, like I said, some companies generally trade at a high PE ratio valuation. This company seems to be trading a bit expensive, in my opinion. If you would have bought in like here, or even say here, like I did when I first started buying this company, then yeah. But it's becoming a bit expensive, but you never know. Companies like this, sometimes they never get cheaper. And if they do, it's not for a long time. But I like to check the free cash flow. The free cash flow you can see from the span of what, 10 years. They've been generating free cash flow every single quarter since 2009. That's crazy, right? Crazy free cash flow generation. As you can see, the price reflected on the free cash flow. Like people are noticing, like, yeah, these people got money and I'm comfortable putting my money here and they pay me a dividend. I'll take that. Then I go to other ratios and you can see the returns on capital. No, the returns are good. They're positive. It's not flipped upside down to assets and liabilities. Their assets and liabilities look healthy and they look capable of paying their bills. Then I go to debt to equity. And as you can see, their debt to equity, they're paying off their debt in incremental time, and they're showing me a history of doing that. Even with smaller equity, they're able to pay off their long-term debt and do it consistently when they want to, it seems. And then they have so much money coming, which makes me even more comfortable just keeping my money there. Then I go to returns on equity. As you can see, that's been growing generally over the years. Returns on assets, also growing over the years, especially as of late. They're practically almost in double digits now. Returns on investments, also growing. And that's what I love to see. Then I go over to other metrics, and that tells you like the dividend yield. Their payout has been growing since 2005. They've been growing their dividend. This is one of those sleeper stocks that you don't even know about, that people don't talk about because it's not hyped up like Nvidia or all these other little AI stocks like Palantir that balloon 300% in 1 year. And do I like those stocks? Hell yeah. Who doesn't like to make money? But these stocks too can provide you with some serious value. But after I'm finished with macro trends, I go to NASDAQ and I search the stock on here. ETN. Go on there, then I go to earnings. And once I go to the earnings, I like to look at the forecast. And as you can see, the forecast is forecast to grow for the next 3 years at least. That's what I like to see. I call it a bright forecast. Then I go to more. I wanted to know what the institutions are doing. Are they buying? Are they selling? And from what I see here, they are selling the stock. Because like I said, it's becoming a bit expensive from where I stand. And you can see who's buying and who's selling here if you want to look into that. But I like to, after that, I go to the insider activity. Or insiders buying or selling, I see that they're selling as well. So there's indications that the stock is expensive right now from the professionals and from the people that work there. They're like, okay, I'm ready to cash out now. I don't see the kind of upside I would have seen prior or something like that. So the insiders are showing me that they feel some kind of way. Then I go to the SEC website and I search the stock. I go to search filings and then I go to full text search and I just type in the ticker ETN and then search. And then it's going to come up. I click on it and it shows you all the filings the company put out with the SEC. You can find quarterly reports. You can find the annual reports. All of that stuff is going to be in here. All you got to do is search for it. And you can narrow your search using these things right here. But we're not going to do that right now. I like to go to the company's website to investor relations. You can just type in Eaton and then investor relations, and it's going to show up. I like to go to company, and then I like to go to investor relations, so I can get a better idea of the company. And all in here, you're going to find out the history of the company, and you can find all the annual reports, their webcasts, their financial presentations, the analyst card. All this stuff could be found on the company website, so you don't exactly have to go to the SEC website, but I like doing it anyway because I like to be thorough about screening my stocks. And then after I go to FinViz and I type in ETN. All these websites, I'm going to provide the links for you like I told you. So stay tuned and look in the description below, and all of this stuff that I'm telling you I'm about to put is going to be in the description for these links to these websites. And what I like to do here is take a quick look at the volume. If I want to buy or sell, I look at this kind of stuff sometimes so I can find out if it's a good time for me to buy or sell. And what I do, I look at the candles. I like to buy on red days. You see, all these red days always seem to lead higher higher valuations, to higher price. So recently, right here, is a place that I would buy, but that's not financial advice. I don't give financial advice on this page. This is for entertainment purposes only and educational purposes only. Do not make any financial decisions based off what I say in these videos. This is how I trade and how I screen my stocks. If you could find value here, then good for you. I'm happy that I was able to help because nobody was there to help me like this, and especially not for free. But when I come to FinViz, I like to look at the performance over a period of time here. I can see all of that here in real numbers. And I can look at all the short interest, the RSI, the gross margins. I can see all the stuff I already screened. I can verify it again looking here. And I can look at the forecast. The exact forecast from the estimates is right here, is what I look at. And they're forecasted for 18%. So double digit growth this year they're forecasting for. And next year, 11%. In the next 5 years, 13%. And you can see all that information here. That's why I come to FinViz. And after I'm finished with FinViz, I go here to stock analysis and I type in ETN because I like to get my information from more than one place. I go straight to financials as soon as I get to the stock. And I can look at the balance, the income, and you can see all the stuff I've already seen before. I can screen for that again. I like to see growth over time, and you can look at the numbers and see the general direction, the margins, the profit margin, all this stuff I like to see. Look at how their profit margins have been growing, not in a straight line, but it's been increasing. Like how? How are they doing this? They have some type of competitive advantage, and that's what made me want to invest in the stock after I finished looking at it and finding out why. So you have to find out why before you invest in these companies. Don't just let the numbers convince you. Let the track record and the leadership explain to you and the numbers explain to you why. But after I do that, I check the balance sheet for the same type of things that I like to look for in a stock. All the stuff that you like about in the stock, I'm going to show you how to do all that stuff and document it for yourself. I go to the cash flow, look at see what they're doing with everything. I like to see that they're paying down debt. I like to see all the different stuff that I have in my screenings that I'm going to show you when I get out of this page. And in the ratios, I check all of this stuff. I don't do this as fast when I'm doing it for a new stock, but because I've done this before and I'm just showing you, I'm just flipping through it to show you my method of how I do it. So when I'm finished doing this, right, I go all the way back to the beginning where I started. I go all the way back to Yahoo Finance. And once I'm on Yahoo Finance, here, I click on the star. And all these things I have written down here, all these watch lists, are all the stuff that I like about a stock or don't like about a stock. Some of this is misspelled. My bad, bro. I'm going to fix that. So all of this stuff here about stocks, I put here. And then I score all this stuff that I like and I don't like. And I count it up. And when I get up here, all the attributes I liked and didn't like are considered. And then I grade it by a score. And this stock scored a 22. The highest the stock is scored is a 30. So it's not the best stock in my portfolio right now. But it's higher than average because a 30 is the highest, a 1 is the lowest. If it's in the 20s, it's like an average stock. But because I've been holding it for so long, I still like it. And after everything that we've seen so far, at the end of the day, I think that Eaton is a hold. If I didn't own this stock already, I would not be buying it. I would have it on my watch list, of course, but it's a bit too expensive for me to continue buying it right now. And that brings us to the conclusion of our video. If you made it this far, thank you. I really appreciate it. I hope I provided you value. And I hope you come back and you like, comment, and subscribe. Drop a comment if you want me to screen a stock for you. I'll be happy to do it for you. We're here to help each other. And I want to find out about stocks the same way you want to find out about stocks. And if you can put me on, put me on. I want to look at it. I want to help you. I want to show you me screening your stock. So until next time, peace out, man.